Good afternoon, good evening, wherever you're watching me from. Thank you all for joining. So, as you're coming in, please drop your location, where exactly you're watching me from. Okay, let's connect together. This is Priska John Chris, and we are going to be talking about your money game plan. So, we're going to be talking about the different types of assets and why assets are important. We're also going to be talking about why it is important to see yourself as an investor. So, if you're just joining, please tell us where you're joining from and just say hi. So if you can see my screen, please let me know. Can you see my screen? Let me know in the comment section if you can see my screen. So what are assets? Assets are resources that can provide economic benefits now or in the future. They are used to settle debt and can be converted to cash. Why are assets important? They're important for wealth building, And because billionaires already understand the principle that asset is what generates cash flow, not the other way around. If you want to increase the cash flow you have, which is the amount of money coming into your personal economy, cash flow is the amount of money coming into your personal economy. If you want to increase the amount of money coming into your personal economy, you need to increase the numbers of assets you have. So we're going to be explaining what these assets are and how you, as a Nigerian investor or wherever you are, can actually tap into these types of assets. Okay, so today we will learn assets as investment vehicles. We are going to also learn how to be good investors, because some of us don't know how to actually invest in these assets. I had a friend of mine that wanted to buy a particular type of stock, and he got into the stock market because of the hype around a particular stock. Once he got into it and he found out that, oh, this stock is sold, and he sold at a loss. So he doesn't understand why he's investing. He doesn't understand why he even bought the stock. And he lost money. He lost money, he lost time. So it is important to understand that these assets are investment vehicles. You need to know where you are going. I need to know the right vehicle that will take you to where you need to be. So the first question is, do you know where you are going? Do you know who you are? Plan. That's what we'll be discussing today. So who is an investor? That we learn how to invest. What is the I've always thought I had to be extremely rich to be an investor. Because back then when I was young, when someone says this guy is an investor, he's a philanthropist, he's an author, in my head, investor is someone that has millions or even billions of dollars to invest. I didn't know that with my little 5,000 naira, with my little 10,000 naira, I can start investing in the US stock market, in the Nigerian stock market, even in the Nigerian bond market, and I will still see returns with as little as that. When I was younger, I thought I need millions to start investing. I thought I need billions to invest. But as I grew and I learned about investing and the different assets, I understood that you need you don't need much to start investing. So why is it important that we invest? It is important to learn how to invest because you need to be prudent with the resources that you have. Learning how to invest teaches you to be prudent with the resource you have. Learning how to multiply the money you have gives you an advantage, an edge over others. Learning how to invest is you learning the different ways you can apply your little 1,000 naira to make more money for you. There are people that have billions in their accounts but don't know what to do with it, while there are others that have less than half a million and are making good returns with that money. So you need to understand why you need to start investing. You need to learn to understand how to invest. So what is the concept of becoming an investor? What is the concept of becoming an investor? Becoming an investor is understanding that the capital you have is putting your money in an investment scheme in hopes of obtaining profits. There's a big difference between an investor and a gambler. Very big difference between an investor and a gambler. An investor is one that considers the safety of his capital and the adequate return. Big emphasis on adequate return. Because some of us today, we are looking for an investment that will pay us 30% or above monthly. If we hear now that there's this new business venture that came out and it's going to pay you 35% every month, you won't even ask how are they making the money. It doesn't concern you how they are going to generate your 35% monthly. All you know is that you're going to give them your money, and at the end of the month, you don't want to hear stories. You want your 35%. So assuming you invest 1 million naira today, you're going to get 350,000 naira at the end of the month. Meaning, in 2 months, you are getting how much? 700,000 naira for your 1 million. Now, if you ask yourself, what business can you do in 2 months that will guarantee you to even give people 70% return on their investment in 2 months, even in this tipping economy? When prices of things are going up, there's no constant price of anything. Fuel, transportation, whatever that you need is actually going up. So how much do you think you can make for yourself to give somebody 70% in 2 months? This is what most average investors fail to ask themselves. They fail to ask themselves, what type of business is this? How is it possible that they can generate this amount of money? And how am I sure, how can they guarantee that the capital, the 1 million naira I'm going to invest with them, will come back to me at the end of 3 months? If you're going to be investing for 3 months, if you're investing for a year, how sure are you? It's not just getting the profit that is the problem. How sure are you that your money is going to come back to you? So an investor understands and looks at all of this, anything that will guarantee the safety of his money, and then give him adequate return. Adequate return being that he knows that it still beats inflation, and it is obtainable, it is plausible. Not the one that it is not plausible, like the one I talked about, 70% in 2 months. How? Are you not running cost of operation? So, what are these investment vehicles? What are these investment vehicles? Why is it important? What are these investment vehicles? For you to know the right investment vehicle, you need to know where you are. You need to have a solid understanding of what can take you there. Where you are and what can take you there. If I want to get to South Africa right now, as I'm currently in Nigeria, Port Harcourt, what will take me to South Africa from where I am? Am I going to jump on a plane right now? It's not possible. I would need to book boats. The boat will take me to the airport, and from the airport, I move down to South Africa. I fly down to South Africa. So there are different times that I will need the car. I'll need to book boats to take the car. There are different times that I'll need the airplane. If I get to South Africa and where I'm going to, I'll need to get on a speedboat. I will get on a speedboat. If I need to use canoe, I will use canoe to get to where I'm going to. So you need to first understand where you are going, and then how you are going to get there. What can you use to get to where you are going? So where are you going? What is your destination? Where are you going? You can leave that in the comments. Where are you going? Do you want to retire at 35 years of age? Are you just okay with a house and 2 cars, with a good family and a nice paying job? Is that enough for you? What is your destination? Do you want to travel the world? Do you want to have a global business? What do you define as success? What is success? What does success mean to you? You have to write that down. Okay, it's an exercise. You have to write it down. Where are you going? So what are the different types of assets? The different type of assets, we have real estate, we have bonds, we have stocks, we have cash, we have gold, we have business, and we have cryptocurrency. Your business is your assets. So if you already have something you are doing, treasure it, because that's where money is coming in. Anything that you can use to get cash that puts money in your pocket is an asset. Cryptocurrency is an asset. There is also what we call alternative investments. These are things like private equity, venture capital, angel investing, hedge funds, derivative, futures, and currency markets. So cash we have is actually an asset. We don't know that because all we've been told to do is to spend with it. We've never told ourselves that we can trade our cash for assets. We can exchange the money we have for the wealth of tomorrow, which is these assets. So cash, what can we use them for? What are the features of cash? They are the most accepted form of payment all over the world. They are definitely affected by inflation. And as an investment vehicle, it is similar to working. It can be saved, can be spent on needs and wants, can be used to exchange for assets. So what can you do with your cash? You can save them. You can store up for emergencies. Yes. Okay. Emergencies are situations that you can't control, unforeseen situations that you can't control. So the golden rule is to actually save up 3 to 6 months of your expenses in an emergency fund. And I recommend you save with either Piggyvest or with Optimus. That way you save, you earn at least double digits on your money as interest. For Piggyvest, they pay up to 12 to 14%. For Optimus, they pay 20% if you lock it. But because it's an emergency fund, I don't recommend you lock your money. You should keep it where you can easily access it. Hard to reach, but easily accessible. I don't know if this makes sense. Hope it's making sense to you guys. Yes, I recommend Piggyvest. So the second asset that we'll be talking about today is gold. Gold. Gold in the financial world is seen as a commodity. Buying gold is seen as commodity investing because gold are physical raw material that we use, that we need, that we get from the soil. Other types of commodity are silver, oil, crude oil that we know, grains, livestock. These are all commodities. And for grains, a typical example or a layman example for grains is buying rice, maize, or soybeans and stacking in your warehouse. For people that are into storing grains, the people that if they have 2 million, if they have 10 million and above, what they do is to go and buy this soya bean, maize, grain and go and store in warehouse. They buy in large quantity and store. In 2 years, they are able to make double, triple of what they bought it for. So there's what we call commodity investing. Right now, 2 years ago, bag of rice was around 30,000. It moved to 70, it moved to 45, then 70. Currently, a bag of rice is 100,000 naira. So the value if you bought a bag of rice last year for 35,000 naira and you kept it till this year, how much would you have made in profit? So grains, understanding that this is a particular gold, grains, livestock is a form of investing called commodity investing. They are a means to preserve wealth. The value remains constant, but it's hard to carry around. The, it's hard to carry around and it is less liquid. Less liquid means it is not easily converted to cash. It's not easily converted to cash. Then we have business. Business. A lot of Nigerians do not understand what it means to have business, to do business. Business is simply transacting, offering goods or service in exchange for money. Offering goods or service in exchange for money. It could be buying and selling a particular product. It could be offering it could be offering your skill sets. Okay, business. Now the problem with owning this type of assets is that you need a high business acumen to understand business. It requires discipline, high level of discipline to build a business. To build a business that can last above 5 years, it requires high level of discipline, potential profits, but it is very risky because a lot of things can affect the business that you are doing, the line you are in. If you're into agriculture, into oil and gas business, whatever business you're into, it requires high business acumen, and not everyone can be able to stand for 5 years doing a particular business without profits. Because for a business to actually stand and thrive in Nigeria, it has to stay for as long as 5 years. And you still have to be in profit, be able to feed yourself, and be able to expand. So the next one is real estate. I don't know if of us have a business here. Back to business. How many of us, if we have business, you can actually drop your business, what you do. Okay. Drop what do you do? You can drop it in the comment section. And for those that need your service, can connect with you. Real estate is an asset that most billionaires use to preserve their wealth. It is a huge means of preserving wealth if it is done right, but it is highly risky and requires huge capital to start. Land, buying commercial properties, buying residential properties, or even building residential properties, it requires huge capital. And when it comes to it is not liquid, it is not easily converted to cash, but it provides good return. Real estate is one business that is the backbone, is one asset that is the backbone of many billionaires' portfolio if it is done right. If it is done right. Buying land in swampy areas, buying land that has been sold to three different people, there are a lot of risk involved in acquiring real estate, which is why it is important that you do your due diligence before acquiring these assets. But real estate, once you have it, whether as residential property or commercial buildings, which is you buy a hotel and you lease it out for people, you lease it out if you don't want to manage it by yourself, or any property at all, or you have an office space that you can rent out to people, or a mall that you built for any particular venture to take up and pay you. If you do it right, you're set up for life. If you do it right. So real estate is similar to getting on a truck. I'll explain that later. The next asset is stocks. What are stocks? Stocks is simply owning a piece of company that is publicly traded in the stock market. If you own a stock, let me know in the comment section. If you bought shares with MTN, if you bought shares with UBA, let me know in the comment section. If you have US stocks, let me know in the comment section. All right. All right. So, what are stocks? It means owning a piece of a company in the public markets. So, most most of us don't know that we can stay here in Nigeria and have shares that will pay us dividends for life. Shares that will pay us dividends for life. We're not aware of that. And it is very important. It is very important when it comes to building our portfolio that we have these assets. Yes, very, very important. So for US, there are companies, both Nigerian companies and USA companies. Nigerian and USA companies that actually pay you dividends. For USA companies, they pay you dividend in dollars. There are companies that pay you every month because you invested with them. There are companies that pay per quarter. Per quarter is every three months because you invested with them. So why should you invest in stocks? Stocks have potential for huge growth. An example is Tesla. Since the time Tesla was listed in the public space, Tesla have done more than 1000% in profits, meaning that your $10 can actually be $10,000 in profits. It has huge growth potential. It is very liquid because you can easily buy and sell. It requires strong, but what it requires strong market fundamentals, okay? You need to understand how to pick these stocks, what stocks to buy. The beauty about investing in stocks is that it uses compound effect. Your money can compound over time. You can earn dividends with it. You can invest in other assets with the stocks, okay? Most people are not aware that you can invest in real estate with stocks. You can use stocks to invest in real estate. Why? Because some of these real estate companies are actually publicly traded on this stock market. So you can enjoy good dividends by owning a piece of their company. You can own real estate without buying land. And the shortcut to that is by owning stocks, real estate stocks. It's called real estate investment trust. There are also stocks that are crypto related. For example, for this year alone, there's what we call Bitcoin ETF. Bitcoin ETF came out. This is an ETF, which is a basket that tracks the price movement of Bitcoin. So just in case you don't know anything about cryptocurrency, you don't know anything about how Bitcoin works, you can just buy the Bitcoin ETF and keep. As Bitcoin goes up, you see the value of your money will appreciate. You can invest in gold. You can buy gold instead of going directly to buy raw physical gold that is hard for you to convert to cash whenever you need it at a certain period of time, a certain period in your life. You can easily buy gold in the stock market. There are companies that are heavily invested in mining this gold. You can take a portion of that company and they will pay you dividends. Most of them pay as high as 10% dividends. What are bonds? Bonds are simply debt instruments. When you buy bond, it's like you are loaning to the federal government, it's like you're loaning to companies. And anyone that buys into bonds are actually called bond holders. The interest rate is actually, for example, there's the current one that is going on, which is the FGN savings bond. It's currently 18% for 3 years and 17% for 2 years. It means that if you have 100 million naira to invest in this bond, although the limit is 50 million, the maximum is 50 million, the minimum is 5,000 naira. But if you have if you have 100 million to invest in this bond, your gain at the end of 2 years, if you are investing for 2 years, is 34 million. To somebody, that's a good amount of money. But if you have 100,000 now with bonds with 100,000 naira, you can get 4,000 naira in 2 years. It looks like child's play because what is 100,000 naira? What is 34,000 naira? If in 2 years' time, one with 34,000 naira, 34,000 naira will be like 10,000 in 2 years' time because inflation will eat the money. Can you see? So it depends on how much you have to play with, how much you have to invest. For someone that has 100 million naira to invest in these bonds, look at what they are looking at. They're looking at, wow, I'm going to get a fixed return. The savings bond is going to pay me every quarter because savings bond actually pays per quarter every three months. So they are getting a fixed return, stable return, and they are sure that their money is not going to disappear. Because one of the risks of having this amount of money is that it can easily fly away. Before you know, something has taken the money. If it's not tax, you try to invest, you try to go into different investment schemes that will end up eating more of your money. So because of that, most it's not always wise to start up a new business. It's just best to maintain what they have and build with time. So to them, bonds is appealing because if I have 100 million right now, 100 million naira right now, and I have some, and I have a place that's paying me 18%, 18% for a year, 17% for a year, and in 2 years I get at 4 million. That is a good deal for me, because I'm doing something else with. I have other things I'm doing with my money, but this 100 million is what I have stocked or locked up somewhere, and I don't have the energy, I don't have the time, I don't have the capacity to handle it. So I rather invest it with the federal government and be sure that my money is going to come back to me at the end of 2 years. Do you understand? So people that are into the 9 to 5, people that work 9 to 5, if you're a career person, the bonds are actually good for if you have 1,340,000 naira at the end of 2 years. If it's 10 million, 3.4 million at the end of 2 years. And the big thing about this bond is that it is issued every month. And as it is issued every month, the interest rate varies according to inflation. So if inflation is up by next month, the bond rate will also go up because the interest rate is trying to adjust for inflation as well. The next is cryptocurrency. The next is cryptocurrency. So what are cryptocurrency? Cryptocurrency is the new digital asset that allows seamless payments across the world using blockchain. Okay, you can be here in Nigeria and you can pay someone in Russia anonymously. It cannot. The beauty about this cryptocurrency it has gone beyond the centralized finance. It has gone beyond the centralized finance. Now people are buying land. People are buying land in the crypto world. It's called the metaverse. Back in 2019, if you can remember, there is a particular post that Mark Zuckerberg released. He created a video telling us how we can easily connect with friends in the metaverse. But it didn't fly because we're still struggling to grasp what it means to have crypto, what it means to use crypto. So metaverse was like a long stretch, but it is coming. If you have seen the movie Ready Player One, if you've seen the movie Wife Like, where robots are taking over some of the things that we're supposed to do as humans. If you've seen the movie Ready Player One, where you can stay in your house and you can earn money. Stay in your house, you can earn money, you can travel around the world. There are different space. That's where we are going to. Now Apple has released the new Iron Man glasses. They call it Apple Vision Pro. But that has been in existence. We've seen it. When we're watching Iron Man, we thought it was a joke. Now they've brought it to reality. For those of us that watched Ready Player One, if you've seen that movie, that thing is a big reality. It's just we've not gotten to that stage. So what our job as investors is to anticipate this change and wait for them at the junction. We should wait for them because in the next 2 to 3 years, we will not understand where this world is going to. There are robots, there are self-driving cars. You can pay with crypto, you can buy land. This buying land in the metaverse is the same thing as buying domain on the internet. There's Web3. So the infusion of Web3, the metaverse and cryptocurrencies, what we are going to see in the next 5 to 10 years. So if you don't position yourself well in cryptocurrency and understand what you need to know, how to invest in cryptocurrency so that you do not miss out on this trend that is going to make a lot of people billionaires. I don't know. So where are you currently? We've talked about the 7 types of assets you can start investing in with your mobile phone. And very soon I'm going to be showing you the tools you need to invest. So where are you? Are you are you coming out of debts? Where are you? Or you already have savings, you have emergency funds, and you just need to know how these assets can generate cash flow for you. Where are you? We've talked about cryptocurrency, we've talked about bonds, we've talked about real estate. I also mentioned in real estate through stock market. How? Because there are companies that do real estate that are publicly traded on the stock market. Questions, you can be dropping them. So where are you? Are you struggling? Need to know how these assets can generate cash flow for you. My story. So I traveled home recently and I went to see my grandparents. On getting there, I realized that wow, time actually moves fast. I still remember when I was small and I do go home for holidays, and they were young, they were vibrant, and now age has actually caught up with them. And at this age, at the age they are currently, look at me and my grandma. They are not thinking about what T-Pain is doing. They are not. All they know is that they wake up, they see their children, they see their grandchildren, there is food on the table, they sleep, and they are waiting till God calls them. Which is interesting. Interesting because if you don't know where we are going, if you don't know where you're going, it's going to be hard to decide what path you would. For me, I retire very early. My assets, I have already defined financial freedom to me as invested assets that can take care of my expenses. Assets that can take care of my expenses. The cash flow, that is what financial freedom is to me. I still, for me, how long do I plan to live? How long do you plan to live? What's your life expectancy? Are you planning to live till 100? If you're planning to live till 100, how old are you currently? And when do you want to stop working? If you want to stop working at 65 and you're planning to live to 100, it means you have 3.5 decades on earth to not work. It means that your assets, your investment should be able to pay you consistently for that 3 decades, 3.5 decades you are going to be on earth till when God calls you. Do you understand? 35 years of not doing anything. And remember that the assets you're going to be investing in, they also need to adjust for inflation, because we've seen how inflation have in the past 5 years, inflation have moved from 2% to above 30%. So it means that any asset we're going to be investing in should be above 30%, should be giving us above 30% in returns, and should continue to do so. Now, if you understand the financial market, you understand that there are different market cycles. So you need to plan yourself in a way that the assets you have can suit all weather portfolio. You need a deep understanding of these different assets. I'm going to stick stocks. There's a particular ratio that if you're still if you're a student, if you're just starting out life, like you're between 25 35, if you're already working, you have a sort of income, if you have financial responsibilities, there are different mix of these assets that you need in your portfolio to sustain you to where you are going. And that's what I'll be explaining as your money game plan. Are you with me? So what is your drive? What is your drive? Do you know where you are going? Why are you on this journey? Why are you on this journey? Do you just want to be comfortable? Do you just want to be comfortable? I'm like, oh my God, I just want to have 2 cars. I just want to be happy. I want to travel the world. I just want to be okay. I don't care about tomorrow as long as I'm okay today. What is your drive? Why are you on this journey to financial freedom? Are you the breadwinner? Is everyone on your head waiting for you to provide the next daily bread? Do you understand where you are going, where you need to be? And do you understand the means you need to get there faster? What is the means you need to get there faster? What's the thing you need to start doing now? Because one of the things that are stopping us are our habits. The habits we formed along the way. Some of us, we are not disciplined enough. I'm saying it. We are not disciplined enough to maintain this. There's no big deal in any of these things I mentioned this night. There is no. It's just discipline to follow through. Discipline and patience to follow through. There is no big deal in any of this. So what is the means to get there faster? And I'm going to be listing 3 different scenarios for you. So wherever you fall in, you can start designing yourself from there. If you're someone that's still trying to come out from debt, you need to focus on getting out of debt. So you need to build your savings habit. You need to freeze your expenses. In today's world, it is very hard to freeze our expenses because of social media. We are being exposed to a lot of things that we want. We have so many wants more than our needs. And it's difficult to now differentiate what we actually need from our wants. So you need to learn to freeze your expense. Freeze your expense. If you're coming out of debt, you need to freeze your expense for 2 to 3 years. It is going to be hard. People are going to be like, Omo, where you dey? People are going to be asking you, where are you? Where are you? It's going to be very hard. It's going to be tough. But if you're going to get out of debt, you need to freeze your expenses. Because having debt is like is like paying you're already selling tomorrow's earning for today. The money you're supposed to use for tomorrow, you are eating it today. Having debt, the Bible said something about debt. It said, you shall lend to many nations, but you shall borrow from none. Because he who borrows is seen as a slave. For me, forget the physical laws of debt that tells you you have to have good debt and bad debt. I don't think there's anything like good debt and bad debt. When you are in debt, you are worried, you are troubled in your spirit, you're not at peace. You know, they drink water, you know, they drop cup. So if you're in debt, you need to get out of debt fast. You need to freeze your account, build a savings culture. If you are someone that you got into debt because you 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 gamble a lot, you're like, let me try my luck here. This one I've eaten my money. Let me do this. Let me play this one. Oh, this one I've eaten my money. Oh, is it this new investment scheme? Okay, I can make money 35 if they're paying me 35%. You need to calm down. You need to calm down and stop all of these habits that you know that is taking you back to Egypt. What is your money game plan? What is your money game plan? What are the tools you need to start? So you need to develop a saving culture. If you don't have a savings habit, if you don't have a saving culture, you need to develop a saving culture today. And the best app I highly recommend that you can use to start saving. You can use Piggyvest, you can use Optimus. This is it. You can use Piggyvest, you can use Optimus. This is Optimus by AfroInvest. And these are apps you can download in your phone that starts paying you right away. They start, once you deposit money, they start paying you. For your piggyvest, you need your phone number, the phone number linked to your BVN to register, because they are going to send you a message to the number linked to your BVN. For Optimus, I don't think you need your BVN for Optimus. Optimus will pay you 20% in interest if you lock your money with them for a year. The beauty about having piggyvest is that piggyvest is flex. You can do flex. You don't need to lock your money and they still pay you 12%. And two, with piggyvest, you can invest in corporate bonds. For those that don't know how to invest in the bond market, with piggyvest, you can invest in corporate bonds. There's the invest section that shows you how to invest in bonds, shows you how to invest in real estate. Okay, so what they do is, in piggyvest, what they do is they actually see a particular unit, they buy a unit, and then they spread it across the number of investors that want to invest. And the minimum is 5,000 naira. So if, let's say, they want to buy a building for 100 million naira, if that building is 100 million naira, they are going to raise that proposal on piggyvest. When you see it, if you like the project, you can invest in it. They are going to tell you how much you are expected to gain at the end of the year. If it is a year, if it is at the end of 6 months, at the end of 9 months. So it's actually fixed. You use piggyvest for fixed incomes. So you need money coming into your accounts in naira, is piggyvest. Then we have Carrywise. Carrywise is for your money market account, it's for your mutual funds, for your dollar mutual funds as well. Mutual fund is like a pool of investments by different investors. By different investors that are going that they, which would then be handed over a to an investment manager that will then decide what particular assets they will invest on your behalf. So Carrywise is also still good for saving and good for investing in mutual and money market fund. This is Carrywise here. It is an app you can download. It is an app you can download. Then we have Bamboo. Bamboo is a platform that I highly recommend because now they are even licensed in US. They are licensed in US and they are licensed here in Nigeria. This is an app that allows you to invest in these US companies with as low as $1. But you can't use $1 because they actually charge, the commission is $1. So you can use $5. With as low as $5, you can invest in any US stock in your mind, be it Coca-Cola, be it Amazon, be it Tesla, be it Google, be it Netflix. This app, you can invest in them through this app Bamboo, and they will pay you dividends. You receive your dividends in dollars through this app in Bamboo. So it doesn't even matter what Naira is doing. It doesn't matter what Naira is doing. This will pay you. The same with Trove. The same with Trove. So your money game plan. Remember, I said that I'm going to give you 3 different categories of how you should design your money for 2025. So your money game plan is how you mix these different assets to get what you want. The velocity of money that I described before is how your money is supposed to move across different assets. So now I'm going to explain what I mean by the velocity of money. Are you with me? Are you with me? So yes, tools you need to start. Yeah. So The first example is you are coming out of debt. Let's say you succeed in coming out of debt. Let's say you succeed in coming out of debt. All right. And where do you start? How is your money supposed to move across these different assets? So like I mentioned, you have cash. What do you do with cash? You have gold. What will you actually do with gold? You have bonds, you have cryptocurrency, you have real estate. Yes, you have real estate. So how do you mix these assets, and where are you going to? If you're someone that wants to retire at 65, and you're within the age of 25 to 35 years, and you currently have what you're doing, you have something that is giving you income every month. Once you've taken out your necessity, what you need, how do you invest? How do you invest the rest? How do you invest the rest? Okay, so I'm going to use a normal range of 500,000 naira as your income. If you are earning 500,000 naira or above, because this is like mid-range. Some people earn a million. Some people earn less than 500,000. But I'm going to use 500,000 naira. You want to retire at 65, or you want to retire at 60, and you intend to live till 100. So you want to spend 40 years. Your retirement age is 40 years, right? From 60 to 100 is 40. You want to live 40 years on earth in retirement. So if you're 35, now 35 to 60 is you have 25 years to work. So your work life expectancy is 25 years. WLE. Your work life expectancy is 25 years. You can write down. If your work life expectancy is 25 years, what assets can get you there faster, can preserve your wealth, and can give you good returns that you can eat from. Remember that you can eat from. Now, when I talked about bonds, I explained the FGN savings bond in great detail. But there are also other forms of bond. Do you know that why the Nigerian government pays you 18%, 18% for a 3-year bond? The US government pays you 4%. 4%. 4%. So while you are saying, um, 18% is too poor in Nigeria, oh my God, I want to get another place, blah blah blah. USA is paying 4%. You can Google it. USA is paying, I think Japan is paying 3% for their bonds. So if you loan to the US government, they pay you 4%. So if you have $1,000 to invest in bonds, they're going to pay you 4% of $1,000 is what, please? Someone do the math and tell me. 4% of $1,000 is what? Okay. Is that 40? Is it $40 or $4? So how if you have 10,000, if you have $10,000 and you invest in the US bonds, US still 4%. That's how much? How much are you supposed to live on? Now the first thing you need to calculate is, what do you live on? You have to first budget. Knowing that your work life expectancy is 25 years, you need to know how much you are consuming, how much it is to be alive, how much it is to survive, how much is as your necessity. Once you get that out of the way, then you can now decide what particular asset fits where you are going, that can foot your bills and still have enough for you to save. When I talk about the velocity of money, it means how your money is supposed to flow through different assets. And I know I haven't broken that down. So let me use this example. So you started saving, and you are earning 500,000 naira. You're able to save 1 million in your emergency fund. That 1 million naira in your emergency fund, let's say you use piggy vest. Piggy vest, I say, pays 12%. You can go and check it. Piggy vest pays 12% for a year, not every month, for a year. So if they pay 12% for a year, 1 million naira will be 120,000 naira, right? That 120,000 naira is the interest they paid to you for the capital that you kept with them because it's your emergency fund. Now you can decide to use that 120,000 naira and buy stocks because it is your interest. So you've moved your interest to another asset. Please stay with me. I want you to understand this. If you invested, we're using 1 million naira. If you invested 1 million naira for a year with PiggyVest, and all they paid you was 12% of that your money, which is what? 120,000 naira. What did you do with that 120,000 naira? Do you eat it? Do you use it to buy barbecue and do dorime? Or do you move it to the next asset? The next asset will be to buy stocks with it or to buy crypto with it, if you understand crypto. But because crypto is very, very volatile, I advise you to go with either stocks or bonds. Now, that your 120,000 naira as your interest, if you're using 10 million, is 1.2 million. If you're using 100 million, that's how much? 10 million. So I'm using 1 million. 1 million naira as capital. At the end of the year, you get 12% in interest. 12% is 1.2 million naira. 12%, sorry, is 120,000 naira. If you move your 120,000 naira to bonds, Nigerian bonds, FGN savings bond, they will pay you if you put it for 2 years. If you lock your money for 2 years, they will pay you 17% of 120,000 naira, which is like 17% of 120,000 naira is what, please? Because 100,000 naira is 17,000 for the first year and 34,000 for second year. So above 34,000. Let's say you're looking at 40,000 naira. 40,000 naira is what you're going to gain on top of that 120,000 naira. 40,000 naira. So where do you move the 40,000 naira that you are being paid to? You can move it to dollars. You say, okay, you no longer want to invest in naira, you want to start going to dollars. You can convert that 40,000 naira to dollars and invest with bamboo. You can buy any stock of your choice, because the minimum you can start investing in bamboo is with less than $5. So 40,000 naira, you convert it to dollars. You buy a particular stock that pays you dividend. I explained that there are real estate companies that pay high dividends. High dividend, you can go and check it. They pay between 10 to 15% as dividend, meaning that if you invest, the dividend yield is 10 to 15%. There's a particular company that actually pays 18%. There's a particular company that actually pays 18%. I think Amor Real Estate Company. You can Google it. It's a US company that pays within 15% as dividend yield. So look at your money. You've been able to move your money from savings. Your emergency fund has earned you interest. You move that interest to bonds. Your bonds earn you interest. You move that interest to stocks. So as you are earning, you are growing your portfolio in savings. You're building your emergency fund. As you're earning, your money is being moved from piggyvest to bamboo, or bonds, and bonds to bamboo to US stocks. And as they keep generating interest for you, as you keep increasing your earning capacity, you are doing this repeatedly. Because one thing is to get the strategy right, another thing is to repeat, to be patient enough, diligent enough to do this consistently. This is what we call the velocity of money. To be able to move your money across different assets. That I don't know anything about stocks. I don't know anything about bonds, but I know something about piggy vest. I know something about emergency fund. So the first thing I need to do is to save. While I'm saving and while I'm building my emergency fund, I've built my emergency fund. The next thing I'm doing is I'm building my savings. The savings I'm building is for opportunities to invest in different asset classes, either real estate, if I'm buying land, either stocks or bonds or crypto. So after I build my emergency fund, I'm building my savings. If I get to $1 million or $1 million, depending on the currency you're using, if I get to 1 million, I can decide to move it to bonds. If I invest 1 million in bonds, they are going to pay me how much? 340,000 at the end of 2 years. I move 340,000 naira. Remember, I may not even wait till the end of 2 years to get that 340,000. As I'm growing and my income is growing, I'm increasing my portfolio. I'm increasing how much I'm investing in bonds. So, how much I'm investing in bonds, when they pay me the interest, I convert it to dollars. When I convert to dollars, I'm using it to buy US stocks that will pay me dividends in dollars. For those that don't want anything to do with naira, once you've in piggyvest, there's what we call flex dollar. So you can convert your money from naira to dollar, and you can earn 7%, which is higher than what the US government will pay you for investing with them. And the minimum to invest in US government bond is $1,000. But with piggyvest, the minimum you can invest with is just $1. So piggyvest will pay you 7%, but the US government will pay you 4% in dollars. So pick your best. Pick the best. For Bamboo has what we call fixed income as well. Bamboo will pay you 8% to lock your money for a year. So you then decide if you're not going to go through the naira route, you want to do the dollar route, good and fine. You save your money in dollars. You start saving your money in dollars. As they pay you the 7% in interest, you keep your money over to, like, if you're able to get a certain amount that you want to start investing after you've built your emergency portfolio, you move your money straight to stocks. And while you are building your emergency portfolio and your savings, you've already learned how to invest in the stock market. You know how to invest in US stock market. You know how to read news. You know how to read a financial report. You move your money to stocks. When you are growing your money in stocks, you can then move your money to bonds. You can move your money to real estate. You can decide to buy real estate company without owning lands. If you feel that land, you would like to have land, because sure, lands are assets. You've checked the location, you trust the company, you've gotten all your papers right, then you can buy land. You can also use the cash flow generated from the stocks, because is an income producing asset. I hope you're aware, because they pay dividend. Let me say that again. Stock is an income producing asset because they pay dividend. The reason why you will never hear billionaires tell you to invest in stocks, they only tell you that their income producing asset is real estate. You will never hear billionaires or wealthy people tell you to invest in stocks. The only thing they'll tell you is to invest in real estate, because of course that is known. But they won't tell you stocks is an income producing asset. They won't tell you bonds is an income producing asset. There's a news that went round, I think in October, about this man Didi, that was jailed for a lot of crimes he committed. If you listen properly, you would see that he was begging the court for listen. I think he was begging the court to release him, and he was putting a collateral. The collateral he put up was bonds. Most of us are not aware that these bonds are collateral. If you have bonds with the federal government, if you have bonds with the US government, you can walk into any bank and obtain loan. You can use it as a collateral to do anything at all. It is an asset that is recognized globally. Bonds are asset that is recognized globally. So what he had was $50 million bond. But nobody's telling us in school, nobody's teaching us how to invest in bonds. Nobody's telling us why bonds are a necessity. Nobody. But we need bonds. And in fact, bonds is one of the strategy most billionaires use to preserve wealth and transfer wealth to their children. It's through bonds. So I hope I've been able to convey of the different type of assets you can invest in, and also how your money is supposed to move across these different assets. I've also shared with you the different tools you need to start investing. You need Optimus by AfroInvest. If you're thinking of putting your money in fixed, if you're thinking of getting fixed return on your money, they pay 20%. You can go with Bamboo. Like I said, there are companies that have done over 1000%. You know them, Nvidia, Tesla, US companies. Imagine if you invested in Netflix, Google, Amazon, when they were just 50 to be right now. Although Apple doesn't pay good dividend, Apple pays 3.5% as dividend, which is not very encouraging for me because I know I am biased when it comes to dividends. I love dividend paying stocks. I love dividend paying stocks because I'm trying to build my portfolio to be able to generate cash flow over time. So I'm biased to dividend paying stocks. So I said Trove, you can invest in Trove. These are apps you can download right now on your mobile phone and you can start investing. All you need is diligence, patience, and discipline. Diligence, patience, and discipline. And the sky will be your starting point. So let me know if you have any questions. Put them down in the comments. Put them down in the comments. Thank you. Any questions? All right. In the absence of no question, thank you very much for tuning in. Have a wonderful night.